So good afternoon, everyone. My name's Ben Flynn and I'm the CEO of the Geelong Chamber of Commerce, and welcome to our fifth webinar in the series, Making Wise Financial Decisions During COVID-19. I'm really lucky to be joined by some great panelists today who are going to get into a few really meaty topics for you. The feedback we've been getting is that people need more detail, and it's still largely unclear around a lot of the issues that businesses are facing at the moment. Before we get started, I always like to thank our corporate partners at the Geelong Chamber, especially our platinum partner, SC Technology, for all their support, who make these things like this webinar possible for us to deliver. I'd like to welcome, firstly, Nick Klein from LBW. Welcome back, Nick.
Thanks, Ben.
Lauren Saunders from Bendigo Bank. Welcome, Lauren.
Thanks, Ben.
Michael Stefano from Gartland Property. Welcome, Michael.
Thank you, Ben.
And Scott Andersen from Worrells. Thank you for joining us, Scott.
Thanks, Ben. Thanks for having me.
So there's a lot to get through at the moment. Nick, I might just start with you because we're getting a lot of requests from people looking to understand more around the JobKeeper allowance. And that feels like one of those things where more information is coming to light almost hourly or daily on. What's your latest interpretation of that stimulus package?
It's a lot more complex than was originally highlighted, I think, through Scott Morrison's release now. It seems like a lifetime ago. The way it's working at the minute is anyone who's been onto the ATO website, they've only actually registered an interest and to be kept informed of updates. There's been no commitment yet. So on the 20th of April, which is next Monday, the ATO are opening up their website, their online presence, to then accept enrolments for the JobKeeper program. There's a few things that need to be done by employers in terms of eligibility, identifying which employees are eligible, getting the employees' consent to actually go into the JobKeeper program as well, but also assessing whether their employees are also eligible based on different circumstances. So if they're casual, have they been there for 12 months? Is it regular and systematic work? Do they have another job? If the other job is permanent, part-time or full-time, then they're not ineligible. Are they receiving the JobKeeper payment potentially from another employer, so they need to opt out? So there's a bit of work to be done there. And fortunately or unfortunately, the government has stated that with a lot of these stimulus packages, there's joint and several liability, particularly around the JobKeeper one. So that means that there's a whole bunch of people that can be roped into any particular action that the ATO may take if they find that they've been taken for a run. And that includes tax agents like myself, employers and also employees if they've tried to double up on JobKeeper and whatnot. So that's the 20th of April one, that's enrolment. That was originally to run until the 26th of April, but they've scheduled that to go to the 30th now, which means that you've got 10 normal days, so 6 or 7 or 8 business days, however it falls, to get into the ATO online and enrol. You're interested in the JobKeeper program. As part of that, there's also the payment side of things. In the first 2 fortnights of the JobKeeper program is, originally it was you need to have paid $1,500 per employee per fortnight in order to make the employee eligible as well. Now they've given some concessions that as long as you do that by the 1st of May for this first round, that will satisfy. But come May, is you really need to start going into the normal payroll runs to get those payments out to employees. So all of that on the 4th of May is when you actually apply for your payment. And again, that's an online thing. And that means that you then have to then prove what you paid. And that will be through STP or through a more manual payroll process. So that's simply how it works, but there's a lot of stuff around that, particularly in terms of eligibility of the business to the JobKeeper program. So they've now only come out on the 14th, so which is a couple of days ago, from the ATO perspective in terms of trying to clarify how you measure your turnover to be actually able to get into the JobKeeper program. So as it stands now, and bear with me on this one, it's any month ending past the 30th of March for this year compared to a comparable period last year, which was the 31st of March 2019. Is looking at your GST turnover, and you need to speak to your advisor about what that encapsulates. But generally speaking, it's what you put on your BAS at the end of the day. So if you compare 31 March the month of 31 March now to the same time last year, if you've experienced a 30% or greater decrease, is prima facie you're eligible for the JobKeeper program. You can then also apply the April month versus the April month, and then the May month, and then the June month, and so on, up until September. So you can get into the JobKeeper program at any point over the next 6 months, but it's only effective from when you get in. It doesn't get backdated to 30th of March unless you're in this first round. The other way to get in is to actually project your income for the quarter you're in currently, so ending June 30, 2020, and compare that to your actual for June 2019. And again, if that shows a greater than 30% decrease for normal business, that's 50% for greater than 1 billion turnover businesses, then you can also then have access to the JobKeeper program. The pleasing thing to note is that once you're in JobKeeper, is you don't have to reapply, but you do have to report continually every month about what your historic turnover is for the month just gone and what your new projection is as well. And that's
even
all.
if you do the quarterly projection?
What's that, sorry?
Even if you submit a quarterly projection?
As I understand it, yes. And again, bearing in mind that some of these mechanisms are a little bit unclear at this point because it's come out in a mad rush, and every time we open up a computer, it's changed. So this is as it stands today. But once you're in, you're in. But the tax office are gathering all the data around this, and they're also the entity that assesses eligibility. So if you think that you can try and wrangle the system to get around and get in when you shouldn't, you can probably expect them to come back and smack you around once they find out what's going on. So, but there's still a lot more work around that in terms of the employer. There's a lot more things to do. It's actually quite intensive in how to get in. And the tax office has actually said that they expect people like me and other accountants to actually assist with employers in this thing, and it's actually quite complex, more so than what it seems on the face of it. But the benefits of it are $1,500 per employee per fortnight. It's assessable income for the business, but obviously the payment is deductible. There are superannuation issues around the payment of the $1,500, but that depends on what you normally pay employees or whether they're stood down. So, and there's a whole bunch of labour law stuff around that is quite complex as well. So we're getting questions that we just don't know the answer to, and having to defer to people like Becky or Employee Shaw or lawyers just to get answers on that, because it is quite complex again. And if you get it wrong, it can be quite a big financial impost on you later on.
Yeah. Now there is different thresholds, Nick. I suspect not many people. Is it $1 billion for 50%? And then most people will be covered by trying to prove a 30% reduction in their business. And not-for-profits, of which are very wide and varied. My interpretation is that it's really only charities who are registered for ACNC that will qualify for the 15% threshold, as opposed to not-for-profits like the Chamber of Commerce or footy clubs or so on. They'll still be under 30%. Is that?
Yeah, that's correct. So there is a different threshold, and it is narrow in terms of its application. When they say not-for-profits, it's got to do with the ACNC type stuff. So there'll be a few of those around still, and deserving as much as anybody else. And they're suffering as badly, I think, in terms of what they're getting in through income, through donations or bequests or otherwise. So yeah, that's how it works. But it's going to be a mad rush from the 20th of April onwards. So bearing in mind that your financial advisor is probably snowed under with trying to get lodgements done as well, because there are no concessions around that at this point, is if you need their assistance, get in early and get them to help, and make sure you get it right.
Yep. Are you aware of any free services available to businesses who might need some help with the JobKeeper?
Not specifically. I know the city have put on an assistance where you get, I think, an hour for free, I think it is, but I haven't seen that in action yet, and I'm not sure what it relates to. It's just something that came across my table about a week or so ago.
So everyone can access that resource. It's a business support program through economic development at the City of Greater Geelong. And you're right, Nick, they do have a range of support services and vouchers for those services for businesses to sign up to. And they've got quite a considerable amount behind it. So I encourage people to go to that page and register for that business support. So that's a really good one.
Right. So just one more thing, Ben, on if I can, just for 2 seconds on the JobKeeper. Everyone's been talking about employees and wages, but there is actually an ability for business owners who don't take a wage to access the JobKeeper as well. And as part of that enrolment program, I think it is you get to nominate who the business participant is. So it could be one shareholder or one trust beneficiary who can access the JobKeeper payment. And there's no requirement to show that $1,500 per fortnight per participant payment to actually get it back again. So there's avenues around that. And there is some words around startups, those who don't have a comparable period. But again, you best talk to your advisor about how to deal with that through the application process.
Yep. And Nick, I'll let everyone know that LBW have done a really good summary of the next steps for people to take in regards to the job seeker payment. So please check out the LBW website, which is also a link on our resources website on the Chamber as well. So thank you for talking us through that one, Nick.
No worries.
Michael, the other really hot topic for people at the moment is the announcement, I think, yesterday of how you go about discussing or reducing commercial rents with landlords, and certainly you're in the thick of it there with Gartland Property. Is there some values or some suggestions you recommend people take into these kind of discussions?
Yes, similarly to a lot of announcements being made, there's Monetarium out that has a spirit of an agreement, but it's going to be looked after by each state and territory. None of that has actually passed. So we feel that we know what it's going to look like in spirit, but there might be some changes per state. So we're waiting on a bit of direction there. But I think, and yesterday there was another $500 million rent relief, which also was there to assist landlords in some land tax concessions and all that. But I think we've been probably about 6 weeks into this, and we're a bit of the cold front of what is happening with the tenants, but we're the middleman between the tenants and the landlords. And what's become evidently clear in all of this is just transparency. So from a tenancy perspective, you'll get a far better result by laying all your cards on the table. And that's to address what steps you've taken before coming to the landlord. And there might be, we've spoken to our financial advisor, we've gone to the bank, we've done this, we've made these cuts, etc. But you really need to be supplying what downturn you've had. And the more information you can provide, we've found that the landlords are more prepared to work with the tenant, because at the end of the day, the landlords or the investors want a tenant on the other side of this. So the more information, the more transparent that you can be with your agent, or if it's directly with the landlord, I think you're going to get a far better result and someone that's willing to work with you. You really need to remove the tenant versus landlord mentality, because in a lot of instances, it's the sole income of a landlord, or they might be heavily geared on that investment as well. So there's mechanisms for them clearly, but it's really just trying to establish a really good relationship and a really transparent communication all the way through.
And do you think this will actually change the commercial property market over the long term?
Yes and no. I think the effects of it won't actually be known, depending on how long we go. And I say that because employers may become comfortable with working at home practices. And if that happens, and it's a more general practice moving forward, I think large office and commercial spaces won't be as prevalent as they have been in the past. And as retail clients become, more comfortable in the e-space, e-commerce space, maybe they won't have the retail footholdings that we've seen as well. So I think the longer we go, we might take a bit of a hit commercially on some of that stuff. Having said that, this is the investment side of things, because I can't see interest rates going anywhere north for a while. and there'll still be an element of investment. So there may be an underpinning there to keep it fairly stable, but I do imagine a softening. But with that, I think creates opportunities in our residential market as well. Because if it's the appetite for people to be able to work at home more often, I think, and we've seen it over the last 2 to 3 years particularly, our population's been growing at 2.5% or more. I think, those ones to live closer to the capital cities because they've needed it for work may revert to moving to regional areas such as Geelong and Ballarat and Bendigo. And I think that's really going to underpin the residential market and hold it fairly stable, in my opinion.
And you mentioned the Reserve Bank. I think they've come out and said they don't believe interest rates are going to start going up for at least 3 years. So it's going to be pretty...
investors will have some comfort in buying, with a low base there. So you're just obviously going to be, an element of risk from a tenancy perspective over that time. But I think it will rebound fairly quickly. And again, depending on how long we're in, this lockdown or hiatus period.
Now, Lauren, the Reserve Bank was a nice segue into you at the Bendigo Bank. And you've got a unique perspective because you're looking at hearing feedback from your clients locally, as well as being part of a group within the local Bendigo Bank on how to respond best for our community, but also getting leadership from the federal government and the Bankers Association on what kind of relief you can offer. How have you found the last couple of weeks?
Long hours and quite intense would be a fair way to sum it up, Ben. But we went to the market early in terms of our assistance package of how we could look after our customers. We've got assistance packages for our personal customers, for our business customers, and for our not-for-profit customers. So I certainly encourage anyone out there to speak with your banker. The same as what Nick and Michael have been saying, get on the front foot, be proactive, go and have a discussion with your bank around how you feel that things may be impacting you. There's obviously some stimulus packages that the government have announced in the small business space. We're looking to partner with the government on those small business initiatives that we'll be launching those next week. So yeah, there's a lot to think about in terms of the finance of the customer, but also still remaining relevant for customers coming in to see us and needing to do their day-to-day banking.
So on a really practical level for people, again, we're trying to get down to some practical steps for people to take. Can they talk about deferring the repayments on their business loans, waiving some fees on perhaps some of their accounts, those sort of things?
They're all options that's available. So whether it's deferred payments, reduced payments over a period of time, considering restructuring of people's facilities, waiving of fees, etc. We're open to all suggestions that the for the long term and work through this period with them and see them come out the other side. So there's a range of options available, reduced interest rates, the list sort of continues.
And is it only banks that are doing this, or have you heard of insurance companies doing this sort of stuff across the financial sector more broadly than banks?
Mainly banks, but I think again the same thing with insurance companies. They're open to conversations and seeing how they can work through with their customers through this time. So go out there and have a discussion around what you may and may not be able to do. I think they're open to it as well.
So the first step is definitely talking to you. And the eligibility criteria, do you need people to prove that they've had a hit to their revenues?
Depending on the assistance that they're looking for. So personal customers, the criteria isn't as detailed as it is for business customers, but yeah, there is some proof of requirement around the impact it's had on them. Yep.
Now, Scott, inevitably, and we hate to say it, but businesses and business owners will be choosing to exit their business, and there's lots of different ways of doing that. What are some of the options people have for winding up their business and doing it in a way that makes sure they benefit most from it?
Yeah, certainly. Thanks, Ben. I think the first thing to look at And it goes back to what Nick was saying, is to probably reach out to your trusted advisors, whether that be your accountant or your solicitors, and actually look at the numbers and what options are out there in terms of the informal considerations or agreements you could reach with bankers or landlords or your other creditors, because there have been some pretty large changes to the way that people can force people into an exit, so an involuntary liquidation or a bankruptcy. And I think in terms of exiting on your own terms, when you unpack it, it really comes down to the structure that you've used. If you're a corporate entity, then you can voluntarily elect to embark on what could be a voluntary administration, which is a process under the Corporations Act which is designed to preserve a company's business and its assets and to maximise the value of those, to be able to retain them and hopefully continue to trade. So that could take the form of a deed of company arrangement, which is essentially doing a deal with all your creditors. And so that restructures debts, it might restructure the company's affairs. Now, they're going to be more available or more prevalent where solvency, or insolvency I should say, isn't terminal. Now, there are probably, unfortunately, a few businesses out there that may have carried some legacy issues into the current circumstances. And with those circumstances or legacy issues coupled with the current climate or current difficulties in business, is that insolvency could be terminal. And you don't have to wait for a creditor to force you into liquidation. If with the information that you have in front of you, this could be cash flows, looking at the balance sheet, if you determine as a director and a shareholder that it's time to take a step to wind up a business, well, you can do that on your own part by putting the company into liquidation yourself as a director or shareholder. And so that way you're exiting on your terms. You can control the entry into the process, which will ideally get a better outcome for all of the creditors who may be stakeholders in the liquidation. But it can also, by acting within a reasonable time frame, is look to mitigate the other financial ramifications that might come out of personally guaranteed debts or agreements with landlords that you've personally guaranteed, or for that matter, with your bankers as well. And then similarly, in the bankruptcy scenario for those sole traders out in the market, there is the voluntary bankruptcy process, but there's one thing that you can probably explore before that, which is a personal insolvency agreement. And that serves the same purpose as voluntary administration, where you can essentially offer a deal to all your creditors under a formal process under the confines of the Bankruptcy Act to essentially preserve everything and get a better return to the creditors. Whereas if that doesn't apply for any number of reasons, is then bankruptcy might be a solution to deal with all the circumstances.
Yep. Very good. Nick, can I go back to you? Something I'm still a little bit unclear of, and I know people have asked me from a cash flow perspective around the JobKeeper, and I know you did touch on it, so forgive me for going over it again, but is it true that businesses might still be waiting several weeks or months to get payments?
All of the payments to employees need to be made by the end of April, and that's not negotiable. You can't extend it past that. If you don't make the payments, they don't get it.
Yep.
But the ATO have a standard that they will pay or reimburse those JobKeeper payments by the 14th of the month following. But they have indicated that they will try and get it done as soon as possible. So, but what that actually means, we won't know till it happens. So it could be a couple of months, but as Lauren probably indicated, is there might be a facility to go to the bank just to fund that, given if they've enrolled and applied and accepted, that it's just a rolling overdraft around the JobKeeper payment.
Got you. So just so people understand, go through the process with JobKeeper, keep paying your staff, and if you've got cash flow issues, go to the bank and they might be able to tide you over until the government starts paying some of this JobKeeper allowance.
Well, that's one option, or fund it yourself. They're the only two options you've got. You can't not pay the employees and hope to get it retrospectively. So,
yeah. And Michael, how are you finding? Have you dealt or had successful outcomes in terms of people renegotiating with their landlords, or is that just starting to happen?
No, it started pretty much as soon as the announcements were made by the PM, some 5 weeks ago. So again, case by case basis, people have legitimately, people want to do the right thing by people. There's been deferments, there's been reductions, there's been some rent-free. In the spirit of it, we've had landlords that have actually rung us and said, are our tenants okay? Do they need anything? And then there's others that aren't wanting to do much as well. But, we have a fairly large commercial portfolio where we've got probably 1/3 of our tenancies that are requesting some sort of relief or deferment or whatever the case may be. And I would say most of those have been successful. So people have been able to arrange suitable arrangements. And I think will be something that's just it's almost a daily update or a change that something happens. But if you can over communicate to your landlord or agent, I think you'll get a better outcome, because if you can prove where you're at, I think people are more happy to sort of work with you. So, people doing the right thing, and that relationship between the two is more important now than ever.
Yep. And Scott, have you found yet that there's been an increase in inquiries around your side of the business, or is that still yet to come?
To be honest, it is very quiet in terms of inquiry. I think it's yet to come, and the reason for that would be is business providers out there are probably getting in touch with the likes of the guys at LBW to understand what's available to them from the relief packages, taking steps to understand what the future beholds for them from a cash flow perspective as best they can do with the uncertainty. And then I'd probably speculate that as things transpire and certainty as to what the future holds, is that we may see some inquiry uptick in terms of exiting businesses.
Yeah. And Lauren, a lot of your staff are on the front line dealing with businesses. How are they handling it, and what kind of response have they had from businesses?
The response from staff has been that, customers are being open and transparent and seeking what assistance we can provide them with, and being proactive about it, as opposed to sort of waiting until it's 6 months down the track, they've missed payments and those sorts of things. Customers are coming in now. We've certainly got in place some particular teams to assist our customers needing financial assistance. And we're putting more and more staff into those areas as the weeks continue, just to assist customers with the volume of inquiries that we're receiving.
Now, you're open as a branch, or your branches are open?
Yes, they are. We haven't closed. We've had to close a couple of sites due to staff shortages around school holidays, but the rest of our sites nationally remain open. Some of our competitors have taken the step to close our branches, but our executive and our community banks are committed to keeping our branches open to support our communities.
Excellent, excellent. Well, ladies and gentlemen, unfortunately, we've run out of time. I always say this because it is true that 30 minutes is often not enough to unpack some of these ideas. But I'd like to thank you for joining us today, both our guests and our participants, for our 5th webinar, Wise Financial Decision Making During COVID-19. I'd like to thank Lauren Saunders from the Bendigo Bank. Thank you, Lauren.
Thanks for having me, Ben.
Nick Klein from LBW. Thank you, Nick.
Thanks, Ben.
Michael Stefano from Gartland Property. Thank you, Michael.
Thanks, Ben. Thanks for having me on.
And Scott Andersen for Worrells. Thank you, Scott, for joining us this afternoon.
Thanks, Ben.
Thank you, everybody, and good luck. Thank you.
Thanks.
Thanks.
See ya.
Bye.